The conventional wisdom in the market is capital is toxic, give it back to the shareholders, make it go away, dividend it out, buy the stock back, get rid of the money, and if you're going to keep the money, invest it in a 5-vol asset, which is like take your money, put it in the basement and lock the vault and then make sure it never moves. It's dead money. MicroStrategy's approach is to embrace the volatility, embrace an asset that is outperforming the S&P, and in that world, instead of being negatively polarized to capital, we are positively polarized to capital.
In a recent presentation with Michael Saylor, we examined the potential impact of Federal Reserve interest rate cuts on Bitcoin's performance, how MicroStrategy's innovative strategies are leveraging Bitcoin's volatility, and the transformative potential of institutional investment in Bitcoin for the financial landscape. At the time of this discussion, Bitcoin is trading around $70,000, with a 2% decline in the past 24 hours and a 13% increase over the last 30 days. Before we dive into the discussion, don't forget to like, subscribe, and share this channel. Now let's hear more from Michael Saylor.
The more capital that we gather, the more powerful we become, and the more we enrich our own shareholders. This is, it's totally counterintuitive because everybody else in the world thinks you sell equity, you dilute the shareholders. That's true if you don't have a use of proceeds that grows faster and yields more than the S&P 500 index. The cost of capital is the S&P 500. If you want to be positively polarized to capital, you want two conditions. You want to be able to invest the capital in something that beats the S&P consistently. That's the first condition. It needs to have performance. The second condition is you want velocity. You'd like to invest the capital in 5 days, not 5 years. If you can invest the capital in 5 days and then you can show that it actually beat the S&P index, then you've actually got the holy grail. Now you've got a magnet which is attracting capital. And MicroStrategy has pioneered this by combining capital markets activity with Bitcoin as a treasury reserve asset, with the embrace of BTC yield, and the BCT yield shows that in fact we acquired the capital in a manner that was accretive to our shareholders as opposed to dilutive. And that means that when we're actually engaging in capital markets activity, we're doing it in an accretive high velocity fashion. That of course is what is driving this trading volume, what's driving this open interest. And of course, because we have the volatility, many of the things we do are actually selling the volatility, recycling the proceeds of the volatility back into Bitcoin, and then delivering that to our shareholders in the form of a BTC yield. Shall we go to the next slide? Now here's another slide that no one's ever seen before in one of our presentations. Many of you know about MSTR stock, and what I've said is, oh, MSTR stock, it's beaten the S&P 500. And now some of you know about options. MSTR options are more traded, pound for pound than anything else in the S&P 500. And so you know that we are the volatility winner. You know that we're liquidity winner. You know we're the performance winner. What you might not know is that MicroStrategy has sold 6 convertible bonds. And if you had bought any of them, you're up 224%, 86%, 67%, 90%, 41%, or 54%. They've all been successful. They've been some of the most successful bonds ever sold to the convertible bond market. They're extraordinary in that regard, but here's the real extraordinary aha. How do you buy Bitcoin at the all-time high, get the upside of Bitcoin, and get your principal protection and get the downside protected? How do you strip the volatility and the risk off of the investment and keep the performance? You can't do that with an ETF. You can't do it with a straight equity that's 100% upside, 100% downside. But if you look at the chart on the right, and this is just, it just blew me away when I saw it, you realize Bitcoin has delivered 47% performance since those bonds were sold, and our bonds delivered 90% performance.
We just heard Michael Saylor discuss how Federal Reserve policies impact Bitcoin and why MicroStrategy is embracing the asset's volatility. Now let's dive into his insights on their bond strategies, which are outperforming even Bitcoin. He'll explain what this could mean for investors aiming to capitalize on Bitcoin's growth. Let's listen to Michael Saylor's thoughts.
And what that means is if you had bought $1 million of Bitcoin on the day we sold the 25 convert, or $1 million of the convert, or if you just across all of these, if you bought $1 million of each of them in the convert, you would have got a 90% return. And if you had bought $1 million of Bitcoin, you would have got a 47% return. So not only do you get the return of Bitcoin, you also get the downside protection. And in this particular case, I'm kind of delighted to say we outperform Bitcoin, not with our equity. We outperform Bitcoin with our bonds. Now, people, they struggle with what is MicroStrategy's unique advantage in the market? What justifies the market capitalization of the company? Well, one very obvious thing is we are the primary, perhaps the major creator of or issuer of Bitcoin-backed bonds in the world, and we're able to do these at scale. And we've got the credibility to issue them, we've got the know-how to issue them, and we have the permanent capital. We have the $18 billion of permanent Bitcoin, and we have the large equity market cap that provides the floor, that provides the credit for a bond buyer. And yet, you couldn't really reproduce this performance. If you took $300 billion of cash in treasury bills, and you sold these convertible bonds, well, you could guarantee that the buyer of the bond gets their money back, but you wouldn't be able to beat Bitcoin performance. You would be lucky to be able to beat the US Treasury performance. And so if you're going to issue Bitcoin-backed bonds or convertible bonds like this, you need to be 100% Bitcoin, and it needs to be permanent capital. You need to know that you've got it and no one's going to call it away from you. So MicroStrategy's got a very exciting business here. This is right now the best understood part of our fixed income strategy, and it's not the only thing we can do. But what you can see is that we have very successfully executed this strategy to the benefit of the bondholders, and of course also to the benefit of the equity holders. There's a lot of confusion in the market. I mean, MicroStrategy's misunderstood. It's a little bit underestimated. I think the company is undervalued. And it starts from this observation that MicroStrategy is just a holding company that has some Bitcoin on its balance sheet that trades at a premium. And somehow, people that are short the company, they want to work through this logic of maybe the company's just worth its net asset value and a little bit of a premium. But that's kind of like saying a bank is only worth its net, its book value of its capital, or maybe, Apple Computer, 98.5% of Apple is based on forward expectations of the business, and only 1.5% is based upon the liquid assets of the company. So most companies are valued based upon their operations and their reserves. And so if we think about MicroStrategy as a Bitcoin treasury company, what are we doing? Well, we are plugged into the macro economy. The macro economy is being driven by technology, by inflation, by entropy, by chaos. And that macro economy drives the crypto economy. The crypto economy trades 24/7, 365, and people, move around all the crypto assets, and they also trade back and forth Bitcoin, and that's what makes it very volatile. That's why you can sell $1 billion of it on Saturday night. That's why you can buy $1 billion of it on Sunday morning, right? That the crypto economy, or the crypto exchanges plugged into Bitcoin, they are picking up the vibrations and the sentiments and the positive and negative developments of the macro economy. Now, why do people go to Bitcoin? Capital preservation and productivity. And of course, they will continue to do that. And that's a $1.4 trillion asset class. Now, Bitcoin is a commodity. It's a digital commodity. MicroStrategy taps into that digital commodity with our treasury operations. And one thing we do is acquire Bitcoin. We acquire the Bitcoin, we custody the Bitcoin, and we do that on behalf of our investors, because many of them either can't or choose not to hold Bitcoin and custody the Bitcoin. We also issue securities like our equity and like our convertible bonds. And we adjust our leverage from time to time. We leverage up, we deleverage, we, if we have something like this $500 million 28 note that's expensive, we repay it, we replace it with cheaper leverage. So we're always doing that. And in the future, if necessary, we'll fund dividends and any other payments necessary to our security holders. Now, that's the operational business. That business is made possible by our Bitcoin reserves. We have 252,220 Bitcoin. What's special? It's permanent capital.
Watch the full interview by clicking the link in the description. In this insightful presentation, Michael Saylor explains how MicroStrategy's Bitcoin strategy not only leverages potential Federal Reserve rate cuts, but also introduces innovative financial tools that benefit both the company and its investors. We'd love to hear your views. How do you see the Federal Reserve's actions affecting Bitcoin's future? Do you think more companies will adopt MicroStrategy's approach to Bitcoin investment? If you enjoyed this discussion, please subscribe, like, and share our video for more insightful content on the evolving world of decentralized technologies.